Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 50th COT report of this year, and as usual we're going to start off with the changes in commercial positions, so here we go. As you can see, we've got the Chicago wheat on top of the list with a 33% change in large commercial positions. You can see we've got roughly the same change size in large speculators, 31. This is, of course, a bearish COT change signal, possibly affecting prices in the next couple of days. The change itself was larger than average, but nothing too unusual. We do see such changes happening quite often in this market. Opening a 5-year chart, we can see that wheat is currently still trading towards the more bullish COT extreme side of the market, let's say that. So as you can see, as prices have gone lower, the extreme got wider, and we're still roughly at those levels. Of course, we have a little bit of bounce, so more or less between 100,000 contracts net long and let's say 70,000 contracts net long level. That's where commercials are staging at right now. We're there actually for almost the whole year of 2016. So the stress level is high in that sense. We're far away from bearish extreme levels, of course, that's quite obvious. And that basically pushes our eyes towards higher prices or expectations for wheat to go to higher levels in the long run. That's, of course, not something that we can pinpoint when exactly that would happen. You can see that there has been some rises in price of wheat in the last couple of months. So I think that's that for wheat right now. Let's move on and have a look at the natural gas, where we have a 28% change in commercials positions. What's quite obvious and interesting to see is when both commercials and large speculators are taking the same side of the market. In this case, they're both the net short at the moment, and it's only small speculators who are optimistic about the market, who are net long at the moment. So that's quite interesting. So the change signal itself, of course, is bearish. It's actually a pretty large change in commercial positions. If you look at the chart, I would say this may actually be the largest change that has happened in the last 52 weeks. So it's a significant COT change signal, I could say. And if you look at the COT extreme, that's pretty large as well. Let's jump over to the 5-year chart and see that extreme on a wider perspective. Here we go. You can see that, yes, we have reached a significant extreme, meaning large speculators have not been at such levels since 498 reports ago, roughly 500 weeks ago, basically. Same case in commercials. And that is a very significant bearish extreme, and that may put an end to this rally that we have been experiencing in the past more than half a year, or almost a year time. So we've got both of our major COT signals pushing our attention to lower prices, lower price expectations in the natural gas market. That's something we can state right now. Let's move on, have a look at the feeder cattle market, where we have a 22% change in commercials. We've got a 27% change in large speculators. Again, we're talking about larger than average changes, and this is again a bearish COT change signal, and we can expect a bit of a decline on Monday, Tuesday, Wednesday, possibly, if we say that COT change signals do affect prices in the near term. Jumping to a 5-year chart, here we go. You can see that, well, we are more or less in between the two major extreme levels. So I wouldn't say that there's an extreme to talk about currently. In case of small speculators, maybe it's a bit more obvious that we have some kind of an extreme, but I wouldn't say that this is really the signal that I would be acting on right now. So let's just move on to large speculator COT extreme and talk about copper, Russell 2000, and cotton, as we have talked about these markets last week. So there's, of course, this tells us that these extremes are still in place. They've widened to even greater levels. So we're just going to basically go over it again. I can't really add too much to it. what I talked about last week, it's basically the same situation right now. We have a humongous bearish COT extreme in these markets. In copper, I think it's quite obvious that on this 5-year chart, it's very visible. As you can see, we have witnessed a decline in the market already, so that suggests that maybe this is the top. And if it is the top, we would possibly see the continuation of this decline that was in place in copper market for the last 5 years, as you can see. That's a big question, of course. I'm not saying it's going to happen. It's just that the stress level is just so high that I wouldn't be surprised to see much lower prices coming. Russell 2000 is our next market. We have all-time extreme in large speculators and in commercials. Compared to copper, where we only had all-time COT extreme in large speculators. Of course, the 687 report extreme itself is, or can be considered, significant, or we can also say that a close to all-time extreme. So in Russell 2000, same picture. Stress levels have widened even to greater levels. Prices are skyrocketing, and we can expect this to eventually stop, or at least that's what the major expectation is from this report right now. Of course, I advise you to look at other indexes as well. If you have a chance, look at other COT reports of other indexes. That may help you decide whether you want to trade the Russell 2000 or not. Cotton is our next and last market for the review. Jumping to the 5-year chart, here we go. We're going to see a more obvious picture. Yes, it is a bearish extreme, no question about that. And in the past few weeks, we have witnessed a bit of a decline. There is a sort of an uptrend. You could draw an uptrend, trend line over here, and of course that should be broken to really support or give an obvious a picture that this trend has changed, and we could see much lower prices coming. One thing's for sure, we have a bearish all-time COT extreme in this market. I think that tells you everything. We can expect this extreme to widen to greater levels, which would mean that we could see some rise coming soon in the cotton market. Of course, I can't tell if that's going to happen or not. What's a bit disturbing is that we had seen much greater prices, higher prices back in mid-2016, and since then we haven't reached those levels, but the extreme has widened to even greater levels. That doesn't mean that we have to see higher prices coming before we see the decline happening. So I'm not saying that, just would be more easier to accept that. So that is going to be all for this review. Of course, this is just a review. If you would like to have a more in-depth and a detailed COT analysis, then of course you can do that yourself at home. You have this page where you can look at the other COT report types. You can check the futures and options data type as well. And of course, you can add other great functions to the table, the long-term trend, volume and open interest scores, the COT index as well. So I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.